Every time a new technology emerges, people worry that it might endanger or even obliterate what came before it. Like the French bank BNP Paribas, some banks have openly said that they view Bitcoin and other digital currencies as a danger. There is concern that they may lose their jobs and that businesses and consumers will prefer a system that eliminates the need to deal with currency conversion depending on geographic location. The British Banking Association's research on digital disruptions in the UK comes to the same conclusion that financial institutions should stop ignoring how consumers and businesses are changing their money transfer habits. And we have all been asking the same thing. Can cryptocurrency replace traditional banking as it gains popularity? Or can it destroy the traditional banking system? If you were wondering the same things, you don't need to look any further, since we will answer all of your questions today. So, let's begin. The world's first digital cryptocurrency, Bitcoin, was proposed in the aftermath of the 2008 global financial crisis with the goal to create a digital payment system without the involvement of large institutions and to return financial control to the holders of the currency. This happened at a time when the internet was still very new and not too many people were familiar with technology. Therefore, it should come as no surprise that cryptocurrency took some time to take off. But once it did, it shot off like a rocket, quite literally. Today, most financial transactions are digital. When you deal in crypto, you make payment from your online crypto account instead of paying from your online bank account. It can function as a medium of exchange, a unit of account, and a store of value. It is actually the initial days that will lead to the start of modern financial services. In 2011, as Bitcoin and the idea of a decentralized cryptocurrency gained momentum, other cryptocurrencies soon began to emerge. More than 1,600 cryptocurrencies are accessible as of 2018. Some of the more well-known ones include Bitcoin, Litecoin, Ethereum, and Zcash. Additionally, a new cryptocurrency is created every day. There's a fair likelihood that there will be a lot more given the growth they're currently seeing. Many companies have issued their own crypto coins. Not to mention, Facebook has created its own cryptocurrency initiative called Libra. This social networking platform, which has approximately 3 billion users worldwide, has the potential to become the next major cryptocurrency hub. As seen by the statistics, the value of the Bitcoin market cap exceeded $500 billion. By 2026, it is anticipated that the total market value of cryptocurrencies would be $2 trillion. In fact, big businesses like Microsoft, PayPal, Whole Foods, and Newegg accept Bitcoin as a payment. These and other brands are leading the charge and making crypto more accessible for consumers. Moving on to the advantages of cryptocurrency over traditional banking. Cryptocurrency provides much more than conventional banks ever could. They have a significant impact on the global financial systems and central banks' operations. We can already see Bitcoin overtaking traditional banking, since it is technologically and economically far more advanced than the existing financial system. The transaction process is made as simple as possible by cryptocurrencies. You only need a single key to transport your digital cash around the globe in a matter of minutes. On the other hand, using traditional banking requires waiting for the money to be received after being sent. Additionally, sending bitcoins to someone else does not require a bank account. You only need a smartphone, an app, and bitcoins stored on that app. Additionally, you can purchase these bitcoins from an ATM with actual currency. So, for those who do not wish to conduct their transactions through financial institutions, cryptocurrency provides many advantages over regular banking. And anyone is free to use cryptocurrency, unlike setting up a bank account, which requires documentation and other paperwork. In fact, one can avoid coming into the bank and waiting in line for hours to open a bank account by going through this entire process. Most importantly, you own it. There isn't another electronic cash system where someone else doesn't own your account. Consider PayPal as an example. If the firm determines that your account has been exploited for whatever reason, it has the authority to freeze all of the assets that are housed there. Without your permission, this may occur. But with cryptocurrency, you are the owner of both the private key and the associated public key that make up your address. You can't let anyone steal that from you. Don't you think it is the best thing? Also, cryptocurrency makes it simple and affordable to send money to other nations. When sending money overseas via the conventional banking system, there are specific fees that must be paid. But with cryptocurrency, you may send money to anyone in the globe without having to worry about exorbitant fees. In fact, the transactions involving cryptocurrencies are completed in a couple of minutes or even seconds. International cryptocurrency transactions are faster than wire transfers too. Moreover, cryptocurrencies are completely free of the control of third parties, unlike banks. In traditional banking, all the transactions made are managed by the government or bank, but cryptocurrency is decentralized. Due to the decentralized structure, there are less human contacts and therefore no biases. Moving on, the availability of cryptocurrencies around the clock is the next biggest advantage. Only on business days are stock markets open. On a Sunday night, trading at the stock market is not permitted. But with cryptocurrency, it's different. From Monday through Sunday, day to night, the Bitcoin market is open non-stop. Anytime you wish, you can trade on the cryptocurrency market. So, considering its success, will everyone switch to cryptocurrencies and never use actual money again? Or will banks also use it in this system? Probably not. Cryptocurrencies markets may have become popular because of the boom in asset prices. However, they have still not become mainstream. There are a number of disadvantages associated with cryptocurrency, which discourages individuals to switch to cryptocurrency and instead use the traditional banking system. Let's take a look at them. Cryptocurrency values are constantly swinging between two extremes. According to public statements made by well-known individuals like Elon Musk, cryptocurrencies like Bitcoin are also a volatile asset that may see significant price swings. No one knows what the next Bitcoin price will be. And this makes simple tasks like budgeting extremely difficult. The government, for instance, cannot estimate the cost of eggs and milk on a daily basis over the course of a week with cryptocurrency working in banks. There is also concern about how easily hackable cryptocurrency wallets are. Despite the true power of the blockchain, there is still a reputation issue with cryptocurrencies. Older generations are less likely to adopt cryptocurrencies and more likely to trust well-known banking institutions. Another negative is that cryptocurrencies are prone to fraud. There is no legal structure at the federal level that specifies what a cryptocurrency is or what criteria must be met for it to be considered a respectable investment choice. This means that anyone can create a virtual asset, get others to invest in it to hike the price, and then cash out their stake without having to explain why. Then there is the drawback of Bitcoin's inability to reverse transactions. As a result, if you send Bitcoin to the incorrect address, it will never be recovered. No independent institution may change the terms of the transaction because it is final. Adding much-needed certainty and security to the mostly unregulated environment, banks can genuinely play a key role in the cryptocurrency business. However, since the introduction of cryptocurrencies, traditional banks have experienced certain issues. Traditional banks are hesitant to approve the use of cryptocurrencies because they believe the risks involved exceed any possible advantages. In a research by the Royal United Services Institute and the Association of Certified Anti-Money Laundering Specialists, ACAMS, approximately 63% of respondents who work in the banking sector said they see cryptocurrency as a risk rather than an opportunity. In addition to these problems, many nations have made issuing and accepting cryptocurrencies against the law. Both China and Vietnam have gone so far as to ban cryptocurrencies. In a recent statement, Vietnam's state bank said that Bitcoin and other virtual currencies weren't accepted as a lawful means of payment. So, we can say that, despite its significant fluctuations, cryptocurrency is becoming more widely accepted as a reliable form of payment and a store of wealth. That does not, however, make it sufficiently potent to endanger the functioning of central banks and conventional financial systems. Banks will only accept cryptocurrency when they can make a huge fee out of it, or when the government will allow them to do so. If there is no benefit for the government in it, traditional banks will keep seeing cryptocurrency as a rival. And theoretically, cryptocurrencies address many of the issues inherent in the previous financial system. But it won't become practical and genuine unless crypto experts develop the cooperation model and work with banks. Moreover, it's too soon to say whether it is the best approach or not, but one thing is clear. Change is likely to happen. With repeated bailouts and historically high levels of stimulus, the world economy is about to go through a huge change as we move into the digital age. What do you think about cryptocurrencies' rising popularity? Do you think it can replace traditional banking? Let us know in the comments section below. We will be happy to read your thoughts. And if you found this video informative and enjoyed the content, make sure to subscribe to our channel and hit the like button as well. Thank you for watching.